Economic and Policy Advisory. Please make welcome on stage Mr. Olusegun Zaccheaus.
Good morning, everyone. Can you hear me clearly? Amazing. Do we have the slide up? Can we have the slide up? Good morning. Thank you for the very generous introduction. I have a very nice work to do today, and let me start with this caveat. I do not come bearing bad news, so you can clap for me. I do not come bearing bad news. What I'm going to do over the next 30 minutes is to really reflect on what 2024 was. 2024 was a tough year for the Nigerian economy, but more importantly, I'll spend a bit of time to talk about 7 important issues that will shape the evolution of Nigeria in 2025. And I haven't talked about those issues. I will land with what people always ask: what's your outlook for 2025, right? And I'm sure when I'm landing at that point, we'll be, sort of sharing the conclusions together. But always more importantly for me, and as a strategist, it's not about what's going to happen in 2025. It's about how you respond to it as an individual, as a business, right? So I'll spend a bit of time talking about the potential responses, strategies you can take into consideration in 2025. So let's start. I've already talked about my outline. So 2024 was a year of significant reforms, but amazingly resilience, from Nigerians, right? And you can look at the dashboard of where the economic indicators are now. I'm not going to spend a bit of time on this. But if you move on quickly and sort of reflect on what happened in 2024, I think 2024, a really difficult year, muted economic growth, a year of what we call multiple shocks. There are 3 major shocks that happened to Nigerian economy in 2024. We had inflationary shock, right? Which for the first time, I'm sure for a lot of people in their generation, this is the first time of hearing inflation of 30-something%, right? That's one. Number 2, we had what we call exchange rate shock, right? Getting to a significant level of over 1,000, 1,007 to where we are right now. And I think the last part, for a lot of people that raised funds from bank, was significant interest rate shock, right? Premium interest cost was up to about 30%, right? These 3 things made 2024 what it was, a pretty difficult year from a business perspective. But we must not lose sight, and as we think about this, that it wasn't just all bad, right? For us, as we think about it, 2024 was a setup year for a lot of things that will happen in 2025. There are a couple of wins, right? A point around fiscal consolidation, which we all know, was dealt with, right? And that's a question around subsidies, right? From a fiscal, which is the government side, there were a couple of progress, right? Which we achieved. I think where we had achieved a lot more success was from what you call the monetary side, which is what the central bank controls, right? I think a lot of policies were put in place that is leading us in the right direction. Having talked about those successes in 2024, there are a couple of issues that we call outstanding issues, right? And if you look at Nigeria economic framework, you ask yourself the question, what are the issues that are still persistent? One is the significant debt that we have as an economy, which is also expected to increase in 2025. And I'm going to speak a bit about that. The second bit is around the stickiness of inflation, right? We ended last year with about over 34% inflation, right? And I'll speak a bit about the implication for you as an individual. There are other issues, including impacted consumer spending, right? But I think when you then ask yourself the question, what is still the vulnerabilities. And when I mean vulnerabilities, there are things that are a bit of long term that we have as an issue in Nigeria. And you all know the issue around infrastructure deficit that we have to deal with, right? But when we bring all together, now ask ourselves the question, what's the most fundamental problem we have to deal with in 2025? And that will be investors and market confidence. And I'm going to speak a bit about that as we go ahead. So let me leave the past, right, and come to 2025. And we ask ourselves the question, as you think about the outlook, what are the important factors you need to think about in 2025? We've sort of articulated 7 big issues that I'm going to show you on the next slide. And the things you need to think about as an individual, as a business owner, and as a career person, as you think about 2025. The first point is around the fiscal policy, which, when you say fiscal policy, it means what the government is doing. What we've seen is that from a government perspective, we've done quite a lot of work on revenue generation, and we've achieved quite a bit. And with the tax reform, thankfully Taiwo is here, was it going to achieve a lot more? So, but the question we must look at from government is that beyond revenue generation, what are the broader relevant policies that must be executed to drive economic growth within Nigeria, right? That's one. And we need to think carefully about that, because even if you ask the question around inflation, you realize that there's a significant role the fiscal authority needs to play to address inflation. Right? And one of the things people have said when you talk about inflation is high interest rate may not be the only solution to address inflation. So which means the fiscal authority, we need to think about and talk about how they play a role in sort of shaping the economy beyond revenue generation. I'll speak a bit about that as we go ahead. The second point is what I call disciplined monetary policy. Right? So let me explain this very simple. Economy is about production, right? What you produce. And opposite of production is that people buy what you produce. It's also about spending, right? And so at the end of the day, it's about production, spending, everything has to do with money, right? It's the basis for transaction. So when you hear the word monetary policy, it just talks about how money is controlled and managed within an economy. For example, you talk about the price of money. The price of money can be interest rates, right? The price of money in other currency is what? Is exchange rate, right? So when you hear the word monetary policy, it has to do with what the government is doing in managing the money in the economy, right? This is a very, very important part of the outlook of 2025. And the question we need to try and answer is that there are 3 big questions. How will foreign exchange evolve in 2025? Are we going to have better stability, right? And the second point is, how will inflation be addressed from a CBN perspective? And the third point is that how will interest rate be addressed? Let me spend a bit of time on this. So there's a fundamental question around exchange rate stability. And the way you look at it is to ask yourself the question, what are the factors that determine if an exchange rate is stable or not? And not the word I'm using. I'm not talking about exchange rate's price. I'm talking about exchange rate stability. And stability means you can, as a business, predict what the evolution of exchange rate price will be, right? And that's usually the policy function. And you ask yourself the question, so what are the things that determine the exchange rate policy? So there are 5 big factors, right? There's a factor you call price discovery, which means prior to the last 2-3 years, the question you ask yourself is that what determines what dollar is to naira? Have you ever thought about it? Did it used to be Aboki FS? Where you go to decide whatever you see, right? Or what your malam tells you, right? But who told your malam what the price should be? Right? So the process of discovering what the price of FX is a part of the problem we used to have. And I want you to listen to this. First factor was a major problem. But if you look at where we are now, that problem has been solved considerably. Do we agree? right? And you can certainly know where to go to get FX price. So that's first factor on FX stability. The second factor you need to think about is what we call demand supply gaps, right? Prior to recent times, right, we hear manufacturers saying the central bank is owing us $7 billion, $10 billion, right, that they've not fulfilled. As at where we are today, all the significant amount of that backlog has been what? Has been cleared. Right? The third point around FX is the point around liquidity. And let me spend a bit of time on this. Liquidity is really the availability of FX within your economy. And in the long term, what determines your overall liquidity is how you export, right? Is how you earn dollars, right? Every other thing you do in between is just intermediary. So what are the factors that determine foreign exchange liquidity in Nigeria? The main factor is oil production. And if you look at the data, until recently, oil production fell as low as 900,000 to 1 million barrels per day. But guess where we are now? The latest information saying we've also almost gotten to 2 million barrels per day when you include what you call condensate. So you look at that oil production as a factor, you realize that we've gone significantly towards the positive side. Then you then also ask yourself the question, what other factor? Oil prices in the international market, right? And if you look at it, we're at relatively stable price between 75 to 80 to 90. That has gone up significantly. The third point you think about around liquidity of FX is remittances. And I'm happy we're going to talk about JAPA. Is JAPA good or bad? So when you think about remittances, you know that JAPA is what? Is good. Right? So remittances, what usually had been happening is that remittances does not go through the official channels when it comes back to Nigeria. So remittances is the money sent, from abroad to Nigeria. What you have seen has happened significantly, that has grown significantly in the past few months. Right? So when you pull all this together, and I want you to conclude with me that, look, if the factors when the FX was unstable have been reasonably addressed, why should FX rate not be stable in 2025? I'm sure you can answer that question for yourself, right? One last point is what we call the market and investor confidence, right? Which was bad, when things were a bit, murky. But now, two dimensions to it. If you look at the global investors, you begin to hear some positive feedback around our policies, etc. and all that. But when you still ask local investors, they're a bit worried, right? They've not gotten to that point of conviction that things are moving for the better. And that's where the fundamental challenge is. So when you bring me back to my point, when you ask the question on are we going to have FX stability in 2025, what's the answer? So I don't need to talk again, but there's a trick. The trick is the behavioral element of this. If investors do not build the confidence in our economy, if there's a policy reversal, right, and if speculators continue to push against our naira, we might have pressure. But the general trend that we see in 2025 is that there will be better FX stability, and some people have said within the range of 1.5 to 1.6 will maybe what we have. Obviously, this outlook is also subjected to the fact of not having what you call oil price shocks, which means if there's a significant cut in production of our oil, right, it means our FX anyway will reduce. Or if there's a reduction in price, right, it's also affected. But going back to my point on disciplined monetary policy, and from an FX perspective, we expect this to be a lot more stable in 2025. Then we move a step ahead and talk about inflation. And you need to understand the impact of inflation on the economy. For all of us, anybody that has money in the bank, that has money anywhere, that is not earning up to 34% is losing money. Do you know that? Every money, all the money you have at the back of your pillow, etc., they've lost their value. And the simple way to test is that just take the same 100,000 you used to take to Ebano last year. You realize that it gets a lot lesser. And what economists they call something the real interest rate, which a simple math you can do is that you remove your interest rate, inflation rate from it. And if you look at what it is now, if you say inflation is at 34, the CBN rate is about 28.75, it means we are in like negative -6. So which means there's a negative real interest rate. So that's why inflation is really bad. So how will inflation evolve in 2025? So the same question you ask yourself, what are the factors that drives inflation? Right? Economists will say in the long run, inflation is a monetary phenomenon. What does that mean? It means inflation is driven by the amount of money supply within the economy. Right? The question we ask, how did we get here? There are several reasons. There's the angle of supply side, which has to do with production, right? If for example, the production of food, right? We know it has been hampered because of insecurity, etc. And when you look at the number of inflation, you realize that food has been a major driver. But the second part that people don't talk much about is also a monetary phenomenon, because in the past 3-4 years we had a lot of money liquidity in the economy that was not going for productive or production purposes, which is also sort of driving inflation direction. So when you look at that and ask what can be done, so what has been done so far? What the central bank has done so far is to increase interest rates, which means if you increase interest rate, right, what a rational investor would do is that interest rate is right in the bank, I'll take my money instead of spending it, I'll go and keep it what? In the bank. It does sort of reduce the amount of money chasing the goods in the economy, right? Has that been effective? Yes, it has been. But the question you then ask yourself, even if central bank keep chasing this, right, there are supply factors, or what you call the fiscal areas, that have to be dealt with, which has to do with production and a number of other things, right? So when you look at 2025 and you ask and look at those factors, will inflation be better? There are a couple of answers you can have. There's something called base effects. Let me explain it this way. If something cost 100,000 last year, right, and it's costing 120,000 this year, it has increased by what? 20%, right? Am I correct? If something now costs 120,000, right, and it's still increasing by that 20,000, you realize that the rate of increase slows. So because we've had high inflation last year, right, because of the measurements on an annual basis, inflation will naturally be lower this year, right? Do we agree with that? The second point is there's a conversation around rebasing the basket of inflation, right, which will also potentially affect this. Then if we then look at the element of imported inflation, which is also quite significant, once there's exchange rate stability, that impact will also what? Reduce. But the other factor you then need to ask yourself, telecom tariff hike is what? Is coming, which will further increase what? Prices. Energy for all of us in band A, you know what that means. If there's any increase, it also affects. So, but when you put all this together, the answer to the outlook is that potentially inflation will reduce in 2025, but maybe not to the 18s. It will likely be in the mid-20s, right? Which is better, means we are progressing. The last point I'll talk about, disciplined monetary policy, is the point around interest rate. Right. What do we see as evolution of interest rate? We see this follow the direction of inflation. If inflation comes down a bit, we expect the monetary authority to also be a bit muted in the level of interest rate we have in the market. That's that. Let me quickly run through the next 6 points, and let me start with the global trend as a factor to consider. Don't forget, economic or something open economy, which means we do a lot of trade with international economy. Whatever happens in the international environment will affect us. For example, Trump could affect us both positive or what? Or negative, right? So let's start. What are the key factors you consider? There are 3 broad areas to look at from a global perspective. The first one is what you call conversation around geopolitics, which means geopolitics means how do countries play politics with one another, right? There's the second point around mega trends, right? And the third point around global economy. Let me spend a bit of time on talking through each. On the geopolitics landscape, there are a couple of points. There are wars, right? And we see one war ending very soon, right? Yeah, Hamas, that's gone. We don't know what's going to happen with Ukraine, Russia. I'm more optimistic that it will likely also slow down, right? So from a war perspective, we see that stabilizes a bit in 2025, right, on geopolitics. But when you talk about trade and geo-competition, we see that accelerating. We've heard about, the China and US. We heard about the tariff that, the new president wants to give across all the South American countries, etc. and all that. What this does is that it hampers global trade. And when global trade is hampered, it's both good or bad. It can be good in which some trades will be routed back to Nigeria if we can produce well, right? It can be bad if we lower the overall global demand. And when global demand reduces, it means global demand for oil will reduce. And when oil price reduces, it means Nigeria will suffer, because don't forget, FX is dependent on that thing that increase liquidity. Can you see the connection? Right? That's on geopolitics. We expect geopolitics, we're not clear about it, right? Some good signals that you can think about when you read the news is Trump's promise to address the TikTok issues. And I'm sure if you read the news, TikTok is supposed to be banned in the US, but he's going to address it, right? And also, if you take a view that Trump is a businessman, that will also positively affect the overall geopolitics outlook more to support businesses than anything else, right? Let's talk about mega trends. There are two mega trends I'll just speak about, and they affect us. One is sustainability. Sustainability is a critical element of global economy, but what you begin to see is that there's a bit of slowdown and reversal. For example, the global banks have sort of promised to go the sustainable ways in their funding. All of them are making reversal, that they're no longer doing that, right? But if you then look at the other side, is that there's still a lot of opportunity, a lot of green bonds, etc., that can form the source of funding for businesses within Nigeria. So how would that evolve? We see that a bit not growing as fast as we had thought. The second global factor to consider from a megatrend perspective is artificial intelligence, right? This will continue to be a factor both from a country to country perspective, and it will shape the evolution in 2025. The last part of the global is the demand, and the forecast for the global economy from World Bank will say to grow by 2.7%. Morgan Stanley will say probably grow by 3%. The global economy will be okay in 2025, subject to any major shock from war, etc. and all that. And when you bring all this together, let's say, how does it affect us in 2025? Couple of points. Interest rate within the global economy will be lower than it used to be. What does that mean? It means our plan to borrow significant amount from global market will be at lower cost, right? Which also helps the government, right? So let me move away from global and talk about two things very quickly. Security and stability, that we also need to continue to watch out for. There's been increased attacks now in the northeast, etc. and all that. This will potentially affect the outlook in 2025 and is a risk to watch out for. The one other important point is about consumer recovery, right? Consumer has been battered. In 2024, consumer expenditure, if you look at the GDP by expenditure, reduced by more than 30%, which means our disposable income has reduced dramatically. That's a pressure point. What could work in the right direction, right? What could work in the right direction is that if you also look at the budget, significant amount is budgeted for social intervention. We're hoping that is better transmitted to the segment of the economy that requires that. If that is done, that could potentially offset or fast sort of speed up the recovery of consumer within the marketplace, right? Obviously, there's still persistent challenges with poverty, with unemployment, which we still have to deal with because it's a structural issues and will not be resolved in 2025. When you put all this together and ask yourself the question, what do we see in 2025? Just to summarize, the economy will grow, right? We agree. It's just sometimes when the economy grows at a certain level, you cannot feel it in your pocket. So because the economic growth that we are seeing now is just like as population is growing, the economy is growing. So it means the GDP per capita may not increase significantly. So they typically say any growth that is less than 6%, for an economy like ours, is a low growth, right? But the outlook we see is about 3.1 to 3.4%, right? So from a normal perspective, that is good. But from an impact perspective, it may not be significant, right? From a fiscal perspective, that's government now, we'll still continue to deal with fiscal deficit, right? There's a planned borrowing within the budget. I'm thinking despite our revenue ambition, we will still borrow much more than what we have in there. Inflation will be tapered, as I said. It will be between 25 to 27%, except we have any exceptional shock. Exchange rate will be stable. It will not be revalued. So understand so that you don't misunderstand me. It will be within a certain predictable range in which you can plan your business. So 2025, well, I'm not preaching now, right? Will be better than 2024. Oh, I'm not preaching. You don't have to say amen, right? So because it's more of recovery that we're going to have in 2025. Let me quickly talk about sectors, and I skip a bit of that. If you look at the economic sector, and if you've been hearing the story about the GDP rebasing, you realize that one area that has come in significantly is real estate, right? Real estate is like almost like third or fourth in line right now. So in the economy, there are quite a lot of area of opportunities as we know, right? And I'll just mention a few areas I would think will continue to be significant in 2025. From agriculture perspective, area on agro-processing, because of the government focus on agriculture, will continue to be significant. Mining will continue to be a major sector, but obviously because of the capital intensive nature, barrier to entry will be high. Financial services will continue to be interesting, right? And I see a lot of bankers in the house. Technology, information and communication technology is very, very important and will continue to grow. Couple of points you must note, and I swear when you talk about AI, right? AI needs two things to thrive, right? It needs data center to thrive, right? And it needs internet capability. And if you look at the global investment, they are spending more time in investing in the infrastructure that will drive AI. So it needs data center, but data center also need energy, significant amount of energy, right? We'll see that continue to play out globally, and obviously the couple of conversations even locally around this. Manufacturing, interesting sector, a sector we need, but it's one of the most vulnerable sector to all economic vagaries. Right? It will continue to be interesting. And people that run manufacturing, I always like to doff my hat for them. Real estate, from construction perspective, real estate will continue to be an attractive area we must think about. Let me quickly land on this slide, because I've just sort of presented a view of the outlook, but it's always more important of how you respond as an individual and as a business to the outlook. And as we think about this, we've identified some big 7 things that you must think about, both as a business owner, as a career person, as an individual, as you go through 2025. And we've tried to use the word consultant, they like to use things that makes it easier. But I think one of the things we must think about strongly is how you must reinvent your business model, right? Business model talks about how you go to market, how you do your business, right? Every time I see a lot of bikes, delivery guys on the road, I wonder, like 5 years ago, it wasn't like this. You can just live your life on the couch in this Nigeria or Lagos. Let's start with on the couch. Everything you need will come home to made with you. That really shows a business model. So as we go through 2025 for business owner, you need to ask yourself the question: how do I rethink the way I create value within the market? It's really very, very important. The second bit is your relationship with technology. If you are technology averse, can I see your hand? You better not be. I think one important thing I must leave with us here, and AI is not buzzword, is not anything boss. It's reality that I would like to encourage every one of us to incorporate in the way we run our lives and we run our businesses. The next phase of AI, which is the phase of AI agents, which means there are AI that can do specific tasks, and it's not far away. It's a couple of months away, right? And you must ask yourself the question: how do you incorporate this into your business or even into your life as an individual? So working with technology is really very, very important. The third point is around how you manage cost. Right? And the way we think about it is that it's not just about cost. It's about asking yourself as an individual and as a business, what capabilities differentiates me? What capabilities make me win in the market? And once you identify those 3 or 5 capabilities, any other things you do, you must be able to cut costs from those things. Do you understand what I'm saying? I'm not saying you should just go and cut costs. You need to identify what differentiates you as a business, what differentiates as an individual. Any other thing outside those things must be areas that you cut costs. As I sort of wrap up, because my time is up, is obviously we must rethink talent for our businesses, and we're going to spend a bit of time talking about that, and also approach of how you raise fund within the market that's high interest rate, that has high interest rate. I think with these few points, just to summarize, 2024 will be a better year than 2025 will be a better year than 2024. There are a couple of factors that we'll see, but what's more important is for us as business owners, as individuals, to define and execute strategy and responses that will make us win. Thank you very much.